Hey, it is my pleasure to be with you today. I'm Micah Brandenburg. If we have not had a chance to meet, I am the president of Legendary Exits, a business advisory firm. We're excited to share this webinar with you today. And we're going to get started here and just talk a little bit about a couple of things at the outset. One, if you are a CEPA wealth advisor, which is the audience for this webinar, this does count for an hour of non-EPI CE credit. We will take care of that for you. As long as you stick with us through the end of the webinar, we will send that information over to EPI and you'll get credit towards your continuing education there. But here's the question I want to ask you today, right at the very outset of this webinar, and that is, why are you here? What is it that captured your attention that brought you here today? I'm going to guess that you want to grow your practice, your team, your firm, whichever of those three that you are in leadership of, but things might not be growing yet at the rate that you want them to be growing at. And so, yeah, thank you, Richard. Getting clients. I love it. So if you've got a specific reason why you're here today, drop it into the chat. Um, what we're going to cover in this webinar is 4 things that you need to get right if you want to achieve exponential growth. Why do I say that there are 4 things that you've got to get right? This comes from my experience. I've been growing and building companies for the last 20 years of my life. I've been a COO at a company. I've been a CFO at a company. I'll share more about that in just a moment. But what I want to cover today specifically is things that most marketing and growth companies won't run a webinar on. Why? Because there's not cheap and easy money in it, right? But these are the things that are foundational that have to be true if you truly want to scale your practice in your firm. And so I just want to share with you what I have learned after scaling multiple companies, after landing up on the Inc. 5000 list 3 different times, which some of you know that is a list of the fastest privately held growing companies in the US. And so with that, let's dive in just a little bit and let's go to our next slide. We want to just kick it off and sort of position this webinar in the context that this is a 4-part webinar series we're doing. So today we are covering step 2, the CEPA Growth Framework that you see on screen. Last month, because we do these webinars monthly, last month we covered leveraging your CEPA to grow your practice. A couple of different things. We helped you understand why it has been challenging for you to deploy exit advisory in your practice in that webinar. We helped you understand how to build a team, the 3 different time horizons of value if you follow the playbook that we have created for wealth advisors. We laid out exactly what to do month by month with one-to-one actions and one-to-many actions. So if you missed that webinar, you definitely want to go back. We have a replay that is on our website under the Insights section, and you can register for it there. Next month, 8 high leverage growth tactics. We're going to cover that. In May, we're going to walk you through the scripted conversations that we teach wealth advisors to have, because all the magic is in educating and in conversing with clients. If you don't have the conversation, nothing happens. And so that's going to be a really powerful session that we'll have 2 months from now. But today, let's bring it back to the present. Today, we are talking growth frameworks. So who here has tried various tactics in marketing and growth that have wasted time and money? I will be the first one to raise my hand. Robert, I see you raising your hand. Thank you. Raise your hand. There's a there's a feature that where you can raise your hand. Raise your hand. I think we all have, right? That's why there's so much interest in marketing and sales as we grow our practices. I see a bunch of other folks raising their hands. In fact, I'm pulling up my list here. Who's raised their hand? Yes, John, Richard, Bob. Lots of folks saying, hey, I have spent money on marketing strategies and execution, and it's been a waste of time and of money. And to be candid, the whole reason why I am here talking to you about this today is because I have wasted a lot of time and a lot of money on marketing. I left big corporate commercial banking 10 years ago. I started turning around. My first gig was turning around a custom software and development company about 10 years ago as a chief operating officer. Blew a ton of money on the wrong tactics, right? If I could go back to 10 years ago with the knowledge I have today, I would do it all over differently. And that's a lot of what I want to share with you today. Some of you might be saying, hey, Micah, I know that you've got experience doing mergers and acquisitions. I know you've done exits. I know you've been a COO and a CFO. What do you have to offer on the topic of growth? And I would point you just briefly to the 3rd bullet point you see on screen, just about my background and things that I've had an opportunity to be a part of. And some of those opportunities have put me on the Inc. magazine Fast 5000 list on 3 different occasions, the most recent time at the 199th fastest growing company in the country. And we took a company and grew it from 10 million to 50 million in top line sales in just 18 months. And so when you do that, there's a lot of things that you learn from fast growth scaling. You learn to focus on brand clarity, customer acquisition costs, channels, the lifetime value that customers create, some of the things that we're going to dive into in this call today. So if you are new to the Legendary Exit team, again, welcome. I'm Micah Brandenburg. I'm the president. I'm the founder of Legendary Exits. Let me orient you just for a brief moment about who we are and what we do before we dive in. We are a business value growth advisory firm. We work with wealth advisors. We serve your clients who are generating specifically 1 to 10 million in bottom line profit. Privately held companies, family owned companies generating 1 to 10 million in bottom line profit. Those are the clients that we serve. What do we help them do? We help them grow their valuations. We help them craft succession plans. We help them transform their companies to be best in class. Why should that be important to you? Because if we partner together, and as we partner together, because I see partners of ours who are on this call today, we help you grow your practice. As you serve clients and you do it in the right way, we help you grow your practice because we get more clients to exit and we get them to exit at larger liquidity events. We help you retain clients. We help you generate referrals in a way that Exit Advisory does uniquely on its own. I've talked about that all in last month's webinar, so I will not belabor that today. And I want to dive right into our content. So what is a growth framework? We promised you a growth framework that was part of the title of this call today. And so I just want to dig into that real briefly and say, what is a growth framework? Let's start by talking about what it is not. Growth framework is not content marketing. It's not posting on social media. It's not driving people to conversion channels. That's content marketing. It's not one-to-one outbound. It's not connection campaigns on LinkedIn. It's not targeted phone calls and outbound and outreach. It is not one-to-many marketing activities like paid advertising on LinkedIn or Google or Facebook or any other platform you could think of. It's not cold email, and it's not even introductions from CPAs and estate planning attorneys that we all love, right? So what is a growth framework? If it's not those things, what is it? As a compare and contrast, it's what you see up on screen. It's 4 things very specifically. 1, it is the clarity that powers all that you do. Your marketing, tactics, and messaging, your sales conversations, the brand clarity that drives that. That is at the foundational bedrock of a growth strategy. It is having the solutions that actually meet the needs that your customers want. And we're going to talk a little bit more about that because particularly as customers get into that very desirable spot, as business owners grow and they crack that $1 million in bottom line threshold spot that we all would love to work with, right? They have different needs. They have different expectations. Are you meeting those? We're going to talk about that. Thirdly, targeting. The vast minority of business owners, and we're going to talk about this, less than 2%, are actually going to move the needle for you. If you're really trying to grow your practice by achieving liquidity events that are going to grow your assets under management, less than 2% of all clients are really going to move the needle for you. And we're going to dig into that deeply today. And then fourthly, we're going to talk about, as a result of clarity and having the solutions our clients want and targeting clients, because again, less than 2% of the ones that we probably want to be working with of all business owners in the US, then how do we actually connect with them? How do we put our message and our offer in front of them? The problem with jumping to tactics or to execution, again, tactics and execution are the things I listed here. The problem with jumping there first is that none of this works unless you get these 4 things right that I've got up on screen. I'm telling you, I have wasted hundreds of thousands of dollars, even into the millions as I've scaled companies because I haven't gotten these things right. And I want to pass that knowledge on to you today. It doesn't matter if you are a solo advisor. Doesn't matter if you lead a small team. Doesn't matter if you lead an entire agency or firm. All of what I'm about to talk about today are powerful insights that apply to you because we have put these to work for our partners and for our clients who are wealth advisors. So 4 different insights we're going to cover today. The first one that you need to get radically clear on is you need to be radically clear on your brand strategy. I want to talk a little bit about brand. Unless you're a marketer, you probably don't use the word brand all the time. In fact, when I was a commercial banker and I started hanging out with a bunch of marketers, they were always throwing the word around brand. And I was like, what are they talking about? Nobody uses that word in that way unless you're a marketer. I want to give you 2 quotes. One by Jeff Bezos, founder of Amazon. I think we all know who Jeff is. He says, your brand is what other people say about you when you're not in the room. Your brand is what other people say about you when you're not in the room. I'll give you another quote that's really famous around brand by Walter Landor. He said, "Products are made in a factory, but brands are created in the mind." Think about that for a minute. Brand has a place that it is created, just like a product is created in a manufacturing plant. Brand is created in the mind of the audience that we're working with. So again, perception, what do people say about you when you're not in the room? And brands are created up here in the mind. So this leads to a logical question. How do you control what other people say about you when you're not in the room? How do you control what happens in the mind of others? And I would say you focus on the things that you can control, and that is creating clarity. So I want to talk a little bit about brand clarity for a moment. I want to talk about three foundational elements in this first of 4 points. There's really three things that I have seen over the years, whether I was scaling a company from 10 to 50 million, whether it was startups, whether it was a company I turned around 10 years ago, going from maybe 2 to 5 million in sales. These are critical to every company. And so the first one is really clarity about our customers. The second one is clarity about who we are and the value we bring to them. And the third is just a compelling vision about where we're headed. And so I'll just break these down to you super quickly. Customer clarity, ideal client profile. If you're a wealth advisor and you have a background working with consumers, high net worth individuals, retirees, and you're trying to make that pivot to business owners, and maybe you've had success with business owners, but you want to do more there. One of the ways that I want you to think about ideal client profiles is in three different lenses: firmographics, demographics, and psychographics. I'm not going to go into it too deeply here because I'm going to address it later in targeting, but firmographics is the new piece for you. You said, Michael, what are demographics? Demographics are describing people, gender, male, female, age, those sorts of things. Psychographics, where things really start to come alive. What do people feel, think, believe? That works its way out into action. What's different about now addressing the business owner market is firmographics. That is, how do we describe the company that that business owner that you would like to have as a personal client, or you do have as a personal client, how do they describe their company and targetable criteria? We need radical clarity on it. I'm going to talk more about this later, so I'm going to gloss over it now, but radically important. Second piece is this: brand clarity. So if we understand the customer we want to serve, and then we begin to come and we say, well, who are we? What are the strengths that we have? How is it that what we are doing is the absolute optimal solution for our clients' needs above and beyond anybody else in the space? A unique selling proposition, a unique value proposition is not necessarily a client-facing messaging piece. It's actually a guiding statement that we use internally in the company so that we know, so that our team members know why we are the optimal solution for our clients, right? Isn't necessarily the external copy that we use in marketing. So again, we're clear about our clients, who they are, business clarity, personal clarity, what they think and believe that works its way out into action. We're clear about who we are, right? And the value that we bring that makes us the optimal solution. Third level of clarity that you need to be clear on the basic things around mission, vision, and values that we talk about so frequently in business. Values, what are the guardrails? How are you going to live as you execute on this business? What are the things that are radically important to you? What are the offerings that you have in your business, right? Why are you doing this? Where are you headed? These sorts of questions. You say, Micah, how would I get clarity on some of these things? We're going to talk more about it, but I'll give you a couple of just quick things. I think one of the ways that we can get clarity is certainly through reading, through self-reflection, and even through external voices. But one book that I would highly recommend to you on this last point around creating clarity in the vision is Gino Wickman's book, Traction. Some of you, many of you, whether you know it or not, have clients who run their business on the entrepreneurial operating system. It's based on Gino's book, Traction. And he has 8 questions that create clarity about your business here, right? Even dovetails a little bit into the ideal client profile. Would be a wonderful book to pick up and work through those questions if you have not done so. I want to just say, why is it important to have that brand clarity? We're talking about brand clarity, that perception of how people think about us, right? What are we doing to inform how people think about us? Well, to be clear, we don't control how other people think, right? What we can control is ourselves. But when we get radically clear on these things, when we get radically clear about who these clients are that we're about to serve, when we get radically clear about who we are and why we are the optimal solution to our clients, that we'll speak more about in a moment, when we get clear about where we're headed, well, now Now that becomes very easy to begin messaging that. So two outflows of that. One, when we do this work, it makes us customer centric. It can't just be all about us. We got to be thinking about the customer. Who are they? What are their expectations? What are they feeling? What are their pain? Right. And so, what I love about going through the three exercises that I just talked to you about earlier is that it makes us centered on the customer. Two, is that ideally this powers everything that you do, right? Who you're going to target, what you're going to say to them, that's messaging, all of the tactics, even your sales process. You know, one of the number one places that clarity is seen and is felt the fastest is in your sales process. When you go through this work, you might be saying, hey, I want to take this and I want to grow my business, I want to have more leads coming in the door, so to speak. But the place where clarity actually has its first impact is in sales conversations. And so I would encourage you to say, you know that you're making progress on brand clarity when people come into your sales conversations prepared, when people move through them fast, when you're winning a higher percentage of those opportunities that you have with prospective clients. It's actually the sales process, in my opinion, where we get the fastest feedback very frequently in B2B. So I do want to talk a little bit about a common objection that I get from wealth advisors. And they say, Micah, I just want leads. It sounds amazing what you're talking about, but I just want leads. And what I would say to them in return is, hey, that's great. Everybody wants leads, but here's the key questions. Who are you going to talk to? When you do, what are you going to talk about when you have these conversations with business owners? What do those business owners care about? What is it that's going to get their ear? And what is it that you're going to say to them when you have a conversation with them? What's your offer? How are you going to find these people? So in making the statement that we just want leads, really the question that I oftentimes find myself in, whether it's a client we work with or whether it's a wealth advisor that we partner with, is I get it, but that's the outcome. What you really need to focus on is all the things that are going to get you to the outcome. And that's really what we're focused on in this conversation today. By the way, we go into these topics. Some of you are aware that we have a very definitive playbook on how to execute on the CEPA model for wealth advisors. We rolled it out about a month ago. It was received so well. I'm not going to tell you the name, but there is a large firm who wants to use it to train about 1,000 of their CEPA wealth advisors in the US that we're in talks with. So that was pretty exciting coming out of our last month's webinar. But all this to say, if you want to go deeper, there is more information in that playbook. And in fact, I'm going to ask Jenna, who's my team member on this call with me, to go ahead and even drop the URL right into the chat where you can actually download that playbook. It's 30 pages long. All of these 4 webinars that we're doing, the one last month, this month, and the next 2, they all stem from that playbook. So you don't have to wait for the webinar next month or even the one 2 months from now. All of the content that we have available for you is in that playbook. So continuing forward on brand clarity. Again, clear on our customers, clear on who we are, clear on our vision of where we're going. Everybody thinks when you start on this path that you get clarity right the first time. And I will tell you that's wrong. My experience with how you gain clarity is that you get first to first cut clarity. You step back, and I'm going to talk about 3 ways to get that clarity in a moment. You step back and you get that first cut clarity, you put it into writing. But when clarity really happens is when you put it into production, so to speak. You start using it in conversations with partners, with prospective clients, with current clients, and you start to see how they resonate on it, right? And that's the step 2. You start deploying this level of clarity that you're creating. And then you have a process and a cycle. I recommend at least once a quarter, if not once a month, but at least once a quarter, you're stepping back and you're observing. You're saying, hey, we changed this messaging. We got really clear on who we wanted to serve. We got really clear about what our unique selling proposition was, and we're communicating it. How is that going? So you're stepping back out of the day-to-day, you're observing that. And then you have a 4th step, which is to iterate on it, right? And so what I would just encourage you with is that it's never perfect the first time. Push to clarity, start acting against that clarity, and then have a process where you can step back and observe whether that clarity has achieved better results or not for you and for your firm. You say, Micah, how would I get that clarity? 3 different ways. 2 of those are from inside of yourself or your own firm, and 1 is external to your firm. You say, hey, Micah, I don't know what our ideal client profile is, or I would love to refine it, right? I'd love to understand better what is unique about us so that we can have that compelling marketing messaging and sales conversations. And so you might be saying, how do I craft that level of clarity around it? And the first place I would look to is I would look to current clients. I would look to the past. And so looking to, hey, who are those business owners that we currently work with that we have loved serving? What do they look like from the firmographics basis, right? Things about the company. We're going to define firmographics in just a little bit. So hang in there if you're asking that question in your mind. Uh, what do those current clients look like from a demographic point of view? What do they look like from a psychographics point of view? What are they thinking and feeling? What do they fear? What do they long for? And how does that work its way out, right? So that's one place to start is this first. As you're seeking to get clarity, another place to start is to look to the future. You might say, hey, we want to work with a different kind of business owner client looking to the future, right? And that's totally okay. I would say, great, go for it. What industries do you know about and are knowledgeable about outside of financial advisory? That might be a place that I would start, is in thinking about developing a different ideal client profile for the future than what it has been in the past for business owners. Third way I would approach this is if you have struggled with this to date, maybe you've even taken stabs at this and you find it confusing, or you just say, man, I'm not making the progress that I need to, get outside help. This is where coaches and consultants come into play at, right? That's the entire role of a coach and a consultant, is to give you their knowledge, help you cut through the maze and the panoply of all these things and take action. Um, Candidly, we do this pro bono for advisors who partner with us. So advisors who qualify and come into different levels of partnership with Legendary Exits, we advise on a pro bono basis for that. You say that's crazy. I know it's crazy. We could easily be charging, $1,000 to $5,000 a month for some of the advisory that we give for free to partners. But that is part of the value that we deliver to partners who want to enter into a deliberate relationship of intention to both serve their clients and grow their practice through a partnership with us. Other advisors who maybe don't fit that profile, we sometimes run workshops from time to time. So I'll throw that out there as well. Again, Playbook is a great place to start. Always welcome to reach out to me, to Jenna on my team, to Elise, who leads partnerships, that I'll come to towards the end of our webinar today with her contact information. And we're always willing to help folks in our community get clarity and better serve business owner clients. Next slide I just want to talk about as we wrap up brain clarity is there can not only be just those two internal reflection sources and the one external, but books are a great way to go. Personal reflection is a great habit. Again, hiring consultants is a great habit. You say, hey, Michael, what are two books you'd recommend? I think I've already recommended one in this webinar, but one would be Gino Wickman's book, Traction. The other, particularly around ideal client profiles, is probably a lesser known book called The Sales Development Playbook, and the author's name is Trish Bertuzzi. So the Sales Development Playbook by Trish Bertuzzi. I like Trish's book. She's done a lot of work in the technology space, training sales teams, and she's got some really helpful things in that book that would be a help to you regardless of whether you serve that same audience or not. Okay, we have addressed part one. We're going to pick up some pace here. I'm going to get a drink of water. So to this point, we've talked about the radical need to not focus on tactics, right? But rather to focus on brand clarity. Who is our customer? Who are we, and why are we the optimal solution to meet their needs? And then thirdly, where are we headed? Those are the foundations of brand clarity that are going to come all the way full cycle in just a moment to addressing our clients. But next piece we want to go to, do you want to talk about a complete go-to-market solution? You say go-to-market, what is that, Micah? You're using fancy lingo. Perhaps that's not something you're familiar with. Go-to-market really speaks about four different pieces of the puzzle. And I'm going to show this on screen right here. Product, price, marketing, and sales. So a lot of what it takes to scale and grow a company, because again, we're talking about a growth framework here. We're talking about holistic, scalable growth, not just bringing more leads in the door, though that's part of it. But a holistic growth strategy is going to address each of these four components. Having the right product and service offerings that meet our clients' needs, setting our pricing at the right place and probably even a premium place to capture the value that we are worth and that we deserve. Thirdly, marketing. How are we going to place that message and promote it in different places? And then fourthly, sales. So I'm not going to address all four of these. We could literally run an entire webinar on all four of these, right? But the one that I am going to go to, because I see many advisors who are struggling with this, and I want to speak to it specifically as the first of the four, which is product offerings. And I want to just give you my thoughts after working with clients throughout the US for really working with entrepreneurs for the last 20 years of my life, first as a banker and then as an entrepreneur myself. But then secondly, working with a lot of wealth advisors. I mean, I have talked over the last year with probably close to good night. Me and our team have probably talked to somewhere between 2 to 500 wealth advisors, right? Both in introductory calls and conversations and ones that we partner with on a regular basis. And here's the thing that I see very, very frequently. The thing that I see as a meta trend is that business owners, as they begin to rise in level of profitability, they tend to outgrow a lot of the advice that their advisors give them. They don't have a great CPA who can do tax strategy. But even as we think about the wealth advisor and the wealth advisor's offerings, very frequently the wealth advisor is still pitching managing their investments. And what I would say to you is the things that I am listing up on screen, these are the things that I hear whether they can vocalize it or not. These are the things that I hear from prosperous and successful business owners who are pushing $1 million, 2 million, 3 million, $10 million to the bottom line that they want and that they need from their wealth advisor, but very frequently who they have worked with in the past are sort of outgrowing them. And so if you can't connect the dots there, I'll connect it for you. There's a massive opportunity with entrepreneurs who are growing through growth phases where they outgrow their current advisor and they need a better one, right? And so let's just key in on this real quickly, whether it's tax strategies, whether it's financial planning, customized financial planning, whether it's a truly client-centered focus on distributing cash out of the business or not. I'll tell you, this is a hot button for almost every entrepreneur I work with. They oftentimes feel that their wealth advisor does not understand them. They feel the wealth advisor wants to sweep all the money out of the company and get it into assets under management. um, wouldn't it be great to actually address this in a more holistic way where we can talk about return on equity, return on assets, where we can talk about the actual cash needs that a client has to fund their growth strategy for where they want to go, and collaboratively together advise a client on what they should and probably likely should move out of the company to diversify and for other reasons, right? Those are the conversations we have all the time with our clients and the wealth advisors that they work with. Charitable giving and legacy. That's on the heart of so many purpose-driven entrepreneurs that we work with. Estate planning, and particularly as we start to grow enterprise valuations, and we're going to start, exceeding the exclusion of the estate tax. Um, and then even getting into cash flow management, and again thinking about growth and exits. But really, in a certain regard, managing the money, it's almost a given, right? And so the question I would just have to you is, what are the expectations of the target client that you're seeking to serve? And I would just challenge that if you're seeking to serve clients who are going to have substantial exit values, they're pushing 1 million, 2 million, 3 million, 4 million to the bottom line. They want more than managing their money. And I would just say, look at what's up on screen. Are these the things that you and your firm are doing for clients? If they're not, that's totally okay. How can you link arms and create a solution for your client with outside partners? In candor, that is the relationship that we have with wealth advisors. Most wealth advisors want to be wealth advisors. They want to understand the business side of the house, but they want to do these other things for business owners. They don't want to be management consultants. They don't want to value companies and increase profitability like we do. And so they address that need for their client through an outside partnership with us. I want to talk a little bit about targeting now. So we just backing it up here for a quick moment. We talked about brand clarity. We've talked about the fact that growth really requires a coordinated go-to-market strategy, which is the offerings that you have, the price, the marketing, the sales. I've keyed in just for a moment on the offerings or the product or service offering. Do you have the things, and are you speaking about the things and leading with the things that really are on the mind of successful entrepreneurs? From there, I want to move into, as we have clarity on who we are and who the client is we want to serve, as we seek to address that with the right set of offerings. How do we target these folks? And this, I can tell you, you're definitely going to want to lean in on, because this is worth its weight in gold. Everybody I've ever talked with about this topic under targeting, who is a wealth advisor, is like, I had no idea. So let's dive in. 2020, every year, this Small Business Administration, the SBA, puts out a study. We're tied in with the SBA because we are the preferred exit advisory firm for the SBA Thrive cohort, which is about 1,000 entrepreneurs nationwide every year, as an aside. But coming back to this study, and you can look it up online. If you can't find it, shoot us an email. We'll shoot you the link. most recent 2024 study says that there are just shy of 35 million businesses in the US with less than 499 employees, 0 to 499. Ironically, I would say a 499 employee business is not really that small anymore, but that is how the SBA derives it. And actually, before we go into this, I just want to pause for a quick moment. I'm going to back up a slide. I'm just going to pause for a quick moment and say, we do have a Q&A feature. As we have moved through the brand clarity elements, as we move through the go-to-market strategy elements, what questions are not clear to you? What are some things that you would want to ask a follow-up question right now if you are unmuted? Go to the Q&A feature in particular. The chat is totally fine for us to dialogue during this, but the Q&A feature helps Jenna manage those, helps us make sure we can get to your questions at the end. And so if you've got a question, you're like, Micah, that doesn't make sense, or hey, I'd love to go deeper on this, we're going to have a Q&A time at the end. So I just encourage you, open up the Q&A section right now. If you've got something that's on your mind around the brand clarity topic that we just covered, or secondly, around a complete go-to-market solution and specifically product offerings, go ahead and put it into the Q&A, right? And that way we can make sure that we can get to that question as we get to the conclusion of our webinar today. So with that, let's come back to targeting. So wanted to make sure that we were able to capture the questions you've got and address those on a custom basis at the end. So targeting, 35 million businesses in the US. Vast majority are solopreneurs. They have no value, or pardon me, they have no employees. So here's my question. Solopreneurs, 82% of the business owners you meet are solopreneurs. What is their business worth? Put it in the chat. Let's pull the chat up here for a quick second. What do you think a solopreneur's business is worth? Somebody who's making money, but they have no employees. Somebody's got to have an opinion. I'm not seeing any movement in the chat, guys. What do you think a solopreneur's business is worth at time of exit? Derek says nothing. Who else? 0. John. Yep. I'd agree with you. There are exceptions where people develop businesses specifically around intellectual property, but I'm not here to address the outlier. I'm here to address the norm, the 80%, right? 82% of those business owners that you meet, they are not going to have an exit. So just put it in your mind right now. It doesn't mean they're bad people. It doesn't mean that you might not want to serve them. They might be a high income earner. Maybe they've got a website where they generate $1 million a year in profit. Wonderful. Invest that money today. They're likely never going to have an exit most of the time, right? Let's move to the next bucket, 1 to 19 employee companies. This is 16% of the 35 million businesses in the US, right? I think it's somewhere a little north of 5 million. What are these businesses worth on average? Hit me in the chat. What do you think? Because I would say these businesses are sellable, right? Very frequently they're sellable. Not the one employee business, but the 10 employee business, the 15 employee business. Certainly these are sellable businesses. What do you think these are selling for on average? I have an opinion. We had some good feedback on 0 for the 82%. Yes, less than 10 million. Totally agree. Less than 2 million. Thank you, Derek. I'm going to go with Derek. The number that I typically use for a business like this is generally, if you've got 1 to 19 employees, the average exit is going to be about $1.5 million, right? Nothing to sneeze at. It's $1.5 million. But let me ask you this question. What kind of exits do you want to see from business owners that you work with? Is $1.5 million exit going to move the needle for you in growing assets under management? The conversation I have with most wealth advisors, they would say no. They're happy to manage that money, but if we're going to go out, we're going to target business owners, it isn't going to be the 1 to 19 employee company. So what does that leave? It leaves the remaining 2%. They have 20 to 499 employees. Let's dive into it. So I have broken out the top 2% of business owners for you. We're starting with knowledge first, and then I'm going to go to some tools about how you can target, just so you understand where we're headed at here. So the top 2% of business owners, I've got this broken out into 4 different segments for you here. We've done the math. There's over 600,000 of these businesses in the US. And we break it out by profit, right? 500K to $1.5 million in profit. Then we've got $1.5 million to 3 mil. We've got 3 to 10 mil. We've got over $10 million in profit or EBITDA. Go to the bolded section that's underneath it. If you're doing this kind of profit, 500,000 and 1.5, you're probably going to have an exit somewhere between 1.5 to $6 million, right? You say, Micah, I thought every industry traded on different deal multiples. Yes, But the reality is the size of your company and the raw EBITDA dollars you generate is a bigger driver of your exit price, particularly when you're a small company. There's certainly stuff you can do to grow valuation. I believe in the intangible capitals, but I would just say these are great rules of thumb and great starting points. So I would say, do you want to play in $1.5 million exits? Great. Deal with 1 to 19 employee companies. You want to play in 1.5 to 6? Then you're going to be dealing with companies with 20 to 70 employees. You want to deal in $6 to $20 million exits? You're going to be targeting employees or companies with 5 to 125 employees on average. You want 20 to $150 million exits? These are typically 75 to 250 employee companies, right? Um, I think in profit, it's very tough to target companies on profit. We typically target on revenue, employee count, square footage of the buildings that they occupy, right? Then, of course, there's this segment here, which is 10 million plus, right? 200, generally greater than 250 employees, exit prices of over 150 million. You say, hey, where do you guys play at Legendary Exits? For the most part, we don't play in this 10 million plus bucket. We play in $1 to $10 million in profit. So really these first three categories, that is the kind of work, that's the client that we serve. The great news is there is a massive amount of clients that fall in the first three buckets. Let's talk a little bit about how you take that knowledge now and target. So let's go back. I'm just going to pick one. You say, Micah, I'm open. I really want to work with these guys here, the 3 to 10 million in annual profit that are going to have the 20 million plus exits, but I'm open to a little bit lower, right? And so we're looking at maybe the 1 to 10 million in profit range, right? Broadly, that's going to have a 6 to $100 million exit, super broad. How do you target them? Again, if they're 2%, these aren't the people you're bumping into around town at all these different places, right? Maybe you're in certain networks, maybe you're in certain social clubs, that may be an attractor there. But if we're just going to market and we're saying, how do I find a Micah? Again, you got to know your firmographics, demographics, and psychographics. So let's talk firmographics for a minute. I told you I would walk you through that, and this is the moment. So get out your pen and paper if you don't have it out, or your Evernote. Industry. Size of company, that's revenue size, annual sales, location geographically, right? Growth stage. Are they a high growth company? Are they, sort of pretty much flatline every year? And then fifthly, ownership structure. That's pretty much the big five, right? So you can say, hey, I want to work with dentists. That's an industry. Or I want to work with people who own multiple dentist office, right? That could be your industry. You say size, certain amount of revenue, right? Maybe it's a geographic location. Maybe you're agnostic and you work across the US like we do. Maybe it's people who are in high growth phases, right? But perhaps for you, like us, you say, we don't work with private equity backed companies or we don't work with VC backed companies. That's true for us. We work with the family owned or the privately held company, right? So that's your firmographics that you can select from. Your demographics are things like age, they're things like gender, they're things like education, professional background that you can target against. Psychographics are those values, emotions, and that work themselves out into action, right? What you typically will find as you go to target, and I'm going to list some tools here real quick, is that you can target on firmographics and demographics. Psychographics is tougher to target on. You typically leverage psychographics in your own understanding. It plays into your messaging. So literally when you're writing words, you're attracting people, right? You're using and you're talking about the things that they're valuing. That's typically how psychographics play themselves out. You typically aren't using psychographics when you go to build a list. You say, Micah, I'm really interested in getting targeted because I know it's the minority of business owners I'm after. Where would I go? I would point you to 4 places: LinkedIn Sales Navigator, Apollo, ZoomInfo, and Clay.com. We've done a whole analysis on this. We did this for one of our partners who's a wealth firm and helped them understand the difference. They found it super valuable. If you want that info, feel free to email us, but I'll give you the quick hits on it. If you're on LinkedIn, Sales Navigator is a great tool. There are some pitfalls with it that I won't get into at the current moment, where it includes people and searches that really aren't your target market. Apollo is a great tool for probably less than 50, $100 a month. You could go in and create a list with the firmographics that we've talked about and say, hey, I only want to target machine shops throughout the United States that do 10 to $30 million of sales. It can be done, guys. It can be done, right? Very cool stuff. ZoomInfo is kind of the granddaddy of list building, but you got to sign a 1-year contract. It's 15 grand on average. And so, Apollo is more of a month-to-month feature. Clay.com is for the advanced user. It's an AI-based tool that's become really popular in the last 2 years. And what we see folks do is pull lists from SalesNav, Apollo, and others, dump them into Clay, or hire a consultant that works with Clay, and then actually start scraping websites and doing some really fun stuff to make sure that who they're reaching out to and targeting is really, really tight. And so that's a really cool feature that you can do with Clay. Um, couple of quick things here as we wrap up this section on targeting, and then we're going to go to our fourth point and then push to the close together. Outbound. When you are outbound, and we're going to talk about inbound versus outbound and other sorts of go-to-market motions in a moment. But when you outbound, the general rule of thumb is niching. Outbound works best when you niche, right? And so what we have found over time is that picking an industry is a way to niche. You've got differentiators on maybe assets under management or the kind of client you work with, but there is a perception oftentimes that clients have. You might not be doing anything different than anybody else, but if you say, I am the wealth advisor for roofers, or I am the wealth advisor for doctors, or a very specific kind of doctor, that's even better, right? Or for marketing agencies or custom software companies. In your outbound, it resonates more, right? Because it's very unusual that people get that specific. So the beauty of niching is a bigger audience and its perceived authority. You say, whoa, 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 bigger audience. How do you get a bigger audience by shrinking the audience? That seems, that seems actually in the inverse. I'm going to run you through a quick query that I just did in Apollo yesterday to demonstrate this. When I run a list on a 50-mile radius, let's say you operate your practice on a geographic radius. You're working primarily with local people. So I ran a list yesterday, geographic radius, 50 miles of where I live. And I only got 392 companies that would match my target criteria. So 10 million plus in revenue, 51 to 200 employees privately owned. That was my criteria. I got 392 yesterday in Apollo, real time. When I remove the local filter and I add an industry like construction, I get 3,900 companies across the US, right? So I'm removing my geographic filter and now I'm niching by industry. I get a bigger list, right? If What I will say is generally when you're list building, if you're doing outbound, you want to list to 10,000 companies. You say, that sounds crazy. I can never address 10,000 companies. You're right. You will never phone call 10,000 companies. But if you're going to leverage one-to-many marketing tactics, you generally want a list of 10,000 or greater. So maybe you've got roofing, maybe you've got 2 industries, maybe 3 industries that you work with, right? And the reason why that is because generally only about 3% of a market is searching for a solution at any one time. So you got a list of 10,000, you get 300 folks that in a given year would be open to speaking to you. Again, lots of exceptions to the 3% rule, but it's a starting place, right? So, if you've got a great brand, if you've got great messaging, great offerings, some of the things we've already talked about on this webinar, really your number one need is to increase distribution. So there's some of you on here that are absolute frigging experts, right? Your clients are delighted with what you do. And your biggest need is that you need to get that message in front of more folks. And I would say niching is one of the ways that you can get that message in front of more folks. I do sometimes hear folks say, well, I'm really concerned that I'm going to ostracize my current client base. Fine, don't put it on your website. Just do it in your outbound, right? You can work with business owners in general on your website, but as you do surgical outbound, you are the wealth advisor for whatever industry you want to work for. With that, let's move to our last thought, which is promotion. So we've talked about brand clarity, understanding who our customer is, understanding why we are the optimal solution for that customer and where we're headed. We've talked about the complete go-to-market solution, product, price, marketing, sales, didn't address it all, really just focused in on product to say that managing money is not really a compelling sales proposition, in my opinion, for wealth advisors. When you're serving a more affluent market, there is other needs that they have, and the offerings have got to be there, whether you've got them in-house or you link arms with folks like us and others to do that. The third is once you've got that together, you can't just be talking to anybody, right? We're back to this pie chart. 82% you probably don't want to talk with. Some might be interested in this, but most of you really want to be at the 2% slice, right? That's what's going to grow your practices over time. And so with that, now that we've got all of that clarity and we've gone through that process, and I realize I'm taking you on a survey trip here rather than a detailed deliverable, so to speak, by the end of an hour. But now that we've got all of that, now we can go to promotion. So promotion really has got 4 different elements. And so let's launch into those. okay, I got all this clarity. Where am I going to promote? What am I going to say? My message? What's my calls to action? And then what is the offer? Let's dive in. Where? You may not have ever seen it explained this way, but every marketing tactic that you have ever heard of or practiced yourself falls into one of these six buckets. And I think it's super helpful to have high level frameworks. It's like, it's not about messaging on LinkedIn or doing events or dinners or paid advertising. It's these six things. All of those things that you've ever heard of are subservient to these six you see on screen, right? So you've got growth by an inbound. So it's an inbound led growth strategy. This is primarily content marketing where we're producing content, either posting on social channels or other different places and calling people to action to convert, right? Then we've got outbound led strategies. This is very targeted outreach. Again, you might use a tool like Apollo, build a list. You might take that list and send them emails. You might take that list and make phone calls. You might send them snail mail because nobody uses snail mail anymore, right? And you're going to say something in that list, coming back to this for a moment, and you're going to call them to action on something, right? And you're going to offer something. So it's super helpful to have these frameworks to think about this in. So you might be calling them to action to come to an event that you're going to be hosting, right? Online, like this event I'm doing here, or a local event in your market if it's a locally geographic company. It might be a phone call. It might be, I don't know. It could be anything. But at the end of the day, all that's subservient to the fact that it's outbound. Product led tends to be more of a technology growth play. Partner led, all of us are familiar with. You may not have ever heard of that. You might call it centers of influence. You might call it partners, right? But when people are indirectly selling on your behalf, so this could be channel sales in the distribution world, or it could be the estate planning attorney who is meeting with their client and says, you need to meet with so and so. They can meet your needs as a wealth advisor. Both of those fall under a partner led motion. Community led, these are movements around ideas, right? Some of the best wealth advisors that I see online, to be clear, on social media, this is what they're doing. They're not talking about investing money. They're talking about causes that are adjacent to money that their audience that they have defined is super passionate about. And that's why they get huge followings and engagement on LinkedIn and on other social media platforms. Event led, these could be events like what we're hosting right now, webinars. These could be local events in your market where you link arms with a regional CPA firm, an M&A, a law firm that does estate and M&A planning, and actually doing in-person events. Messaging, hit on it super quickly. There is a whole deep, dark world of copywriting. If you didn't know about it, there are words that emote, there are words that call us to action. This is a whole discipline unto itself. In general, what words do your clients use to describe their problem or what they want? That's what you want to pay attention to. I'll give you a real clear example. In our own business, in the CEPA world, we call it exit advisory, don't we? That's the language of Exit Planning Institute, EPI, exit advisory. You know that business owners don't typically use the word exit. We know it because we do paid advertising and we run keywords. And I was literally looking at a report 2 days ago with my marketing agency. Do you know what the two keywords are that they query much more than exit? Words around succession and words around valuation. So business owners talk about it as succession planning, right? Or they talk about it as, what am I worth? I need a valuation. How do I grow my valuation? So that would be just one really practical example that would be even be relevant to you. That oftentimes the way that we think about what we do is not the way that our clients communicate it, and we want to communicate in a way that aligns with the words that they are using. So category unto itself, you can hire copywriters who are amazing, but the big takeaway I would have here at the one-on-one level is that the words you use need to reflect the words that your client uses to describe their needs. I want to talk about calls to action real quickly. Then we'll go to the offer, and then we will press towards a Q&A. Calls to action. You've never been a marketer, it's totally okay. Calls to action just means what are we asking the client to do? What is the next step, right? You have a call to action at the end of a sales meeting, most likely if you do it well, right? General rule of thumb, a minority of people, particularly when you're reaching out or people come across you cold, the minority of people, perhaps 3%, 5%, are ready to talk and to buy. That's a direct CTA. Book a call, free strategy session. That's a direct CTA. There's a whole lot of folks, 97%, who aren't ready to do that on average in most industries. And so, what is the call direct to action? It's an indirect download, assess, attend, follow, and subscribe, right? And so, we have that in our own business. So, super clear. I'll tell you how this plays out for legendary exits. You would be absolute nuts if you left this call and you didn't book a call with our partnerships team today. That's my belief, and I'll tell you why. I'll give you a story of a client, a wealth advisor who's a CEPA. We have many that we work with, but just one that's on the tip of my tongue. First 4 weeks of an engagement, we figured out how to increase their valuation by $4 million without growing value, without growing top line revenue. We figured out that the client was missing easily $1 million a year in profit on their profit gap, right? Have another client we're adding $15 million of value to. Have another client we're capturing $1 million of missing profits, right? We've got a turnkey way to do that for you, and it grows your clients. Pardon me, it grows your practice at the same time with more liquidity events in the long term and more referrals in the short term. But if for some reason, I'm explaining the CTA process right now, but if for some reason you're not ready for that, we've got indirect calls to action, right? Download that 30-page playbook that we've created. That is a really comprehensive guide. Attend our next month's webinar. I told you this is webinar 2 in a 4-part series. Follow me on LinkedIn. I interview exited entrepreneurs and we post on LinkedIn. Subscribe to our weekly advisor newsletter. Follow our YouTube channel. Those are all indirect calls to action. When you are ready, you should book a call. That's a direct call to action. So what's the offer? Let's round out this conversation with the offer, and then we're going to press to the close and open it up for Q&A. So the offer, one of the things that I would just encourage you to think about, much we could say about offers, but one micro element is your offer, what you are selling or telling them that you can do, and calling them to action to doesn't have to be the panoply of everything you do. In fact, what I would typically say is that cold traffic, people who come across you, who do not get introduced to you relationally, they typically need micro offers. So if you want to scale your business beyond a relational point of view, you're probably going to have to take your offer and break it into micro offers, little steps, things that are high value, but very little low commitment, low steps for clients to take. And then through that process, they get to know you and want to buy the whole rest of it, right? People who are referred, introduced, they're probably ready, to hear the whole thing, right? And step through that. But again, cold traffic needs smaller commitments in general. As an example, we do 5-year journey, 6 months. We do an opening 6-week engagement. It's a small ask, right? We value companies, we benchmark companies, we assess companies in that opening 6-week engagement before we ask them to commit to an ongoing engagement. It just makes it really simple. And when we layer on top of that, the fact that we typically find all the money that we need to pay for our engagement through that opening 6-week engagement, it's really a no-brainer for a client. And so we seek to make it very, very easy for folks. With that, I just want to recap real quickly before we go and drive towards the close. And I do have a couple of cool things if you hang around for the end, including a way to download and a couple of free things. So hang in there for another minute or two. This is what we've covered today, right? You still need to take this and deploy it. How do you do that? You do it yourself, you hire outside folks to do that. If we can be a role in that, please let us know. This is part of the relationship that we have with our clients. But as we come to the close, I want to be ultra clear with you. What is it that we do at Legendary Exits and how can we help you? I will only take less than a minute to share it with you. So I just want to be radically clear about that. Because obviously today I've been talking to you about how to grow your practice. But we are business value growth advisors. What I've talked to you about, this is one micro element of what we do for our clients to grow their enterprise valuations, right? But here's what we do super clearly. One, wealth advisors introduce us to their clients so that we can grow their valuations, help them craft a custom path forward, a succession plan, and transform their companies. You say, what kind of transformation, Micah? Typically in the first 12 months, 30% increase in profits. Would it be great if each of your business owner clients had 30% more profits that they had to decide what they were going to do with? That would be a pretty nice blessing, including moving it out and letting you manage that investment for them. The other piece of what we typically do for clients is we're crafting a 5-year strategy to 2, 3, 4, 5x their valuation, right? Very simple. That is what we do. The impact of partnering with a firm like ours is massive. Client retention. Everybody's talking about exit advisory. Are you talking about this with your current clients? Two, it's more referrals. The liquidity events are long term. And Elise and the partnerships team can talk to you more about this if you'd like to have a call. The liquidity event is a long-term value. The short-term value is the retention and all of the referral flywheel that we can help create with you, which we can go into more detail on it. And we have real-world examples of how we've done that for advisors with very little effort on their part. If you're an advisor, and you've got a specific client in mind. You say, hey, I've talked to this client. I haven't really known how to move forward. I haven't had a great partner to work with. It makes sense. There aren't a lot of business value growth advisors out there. Book a call. I'm going to have a link. In fact, Jenna, go ahead and drop the link into the chat right now where folks could book a call with the partnerships team and with Elise. Um, and so if you've got a specific client in mind, leverage the link that's about to get dropped into chat. You can book a call and chat with Elise and the team on that specific client, and we could advise you exactly how we could partner together to serve that client. Reason two that you might want to book a call with us to join our partnerships program. So we have a very deliberate partnerships program with wealth advisors. We love this whole CEPA community. We put out playbooks, we put out webinars like this, but we have folks who are people of intention who say, I want to grow my practice, I want to serve business owners, and I want to partner. And partnering is a very deliberate thing for us. And so reach out to Elise and the team, book a call, apply. If you're accepted into that, it does not cost anything. Um, and advisors that we work with know the value of it. They're like, you could be charging money every month to be doing what you're doing with us and advising us and helping us grow our firm. And that's just what we do. It's a spirit of giving. And obviously, we're growing our practice and we want to help you grow your practice at the same time. With that, I've got a couple of QR codes on screen. If you're on desktop, feel free to pull out your phone. First QR code is to book a call with Elise and the
Micah, we
partnerships.
can't see it anymore.
Oh, you can't? Huh. That's really weird. Let me stop the share and let me start the share, guys. I apologize. Can you see it now?
Yes.
Wonderful. So two QR codes on screen, book a call on the left, download the playbook on the right. With that, Jenna, I want to open up the Q&A. Do we have any questions in Q&A that we should address here at the very end?
We do.
Wonderful.
Let's start with Luke. Luke asked, has your team developed sample statement of work documents tailored specifically for wealth advisors serving business owner clients? And if so, how do you recommend structuring these documents to avoid being overly restrictive or pigeonholed?
Is this my buddy Luke Brooks who's asking me this?
It is indeed.
Okay, Luke, wonderful. Let's see. So sample statements of work for clients, for wealth advisors, no. Fully clear, we have very specific statements of work for the shared client that we would serve together, very clear deliverables and those sorts of things. I think the key question that you've got to ask yourself, and I think this is embedded in it, and we can talk more about this if you like, is what is the role that you are playing? And what we're big advocates of, and we talked about this in last month's webinar for anybody who wasn't able to be there, is most wealth advisors don't want to be a business value growth advisor. They want to be a wealth advisor. They want to manage those monies and also do, tax planning and all the great things that wealth advisors are able to do that we are not able to do, right? And so we sort of see that partnership coming together. But short answer, no, we do not have sample statements of work for wealth advisors, but we do have them for the work that we do for clients. Happy to follow up with you, Luke, on that. I might be misunderstanding your question. What else, Jenna?
Noah asked, where do you see the wealth advisor monetizing the exit planning? Is it the liquidity event, or for financial advisors that charge planning fees, are there services they can find revenue opportunities?
And this is Noah?
Yes.
Wonderful. Thanks, Noah, for the question. Really appreciate that. Yeah, again, this comes back to a statement I made just a minute ago. Obviously, you've got to plug in with your broker dealer or your RIA, right, on this particular topic. So compliance first on that particular point of view. Here's what I will tell you, right? EPI, again, I'm going to assume you were not at my last month's webinar. EPI is a very flexible delivery model. And with that flexibility comes massive confusion, in my opinion. And so this is how I would answer your question, Noah. Unless you are a former COO, CFO, or have M&A experience, I wouldn't encourage you to be getting into the business value growth advisory piece of it, right? What I would encourage you to get into the piece of it is the product and service offerings that we talked about back. I'm scrolling back on my webinar. Where's my product? There we go. There we go, right here. These product and service offerings, right? So certainly in addition to AUM, charging a percentage of assets under management, I do see folks regularly, particularly who are RIAs and some who are broker dealers, probably not at the larger wirehouses in a lot of situations, who are charging fee for service and tax strategy, who certainly for the financial planning are doing it. And so there is some level of fee for service work that I do see folks doing. Coming back to the value piece and the monetization, I think where the real big monetization is at, it is a liquidity event, right? That's where you're going to make the greatest amount of money. But you have to be prepared that this is a long game, right? On average, this is a 5+ year game. Um, so how do you make money? Where is the monetization in the short term? We can walk you through this if you book a call with Elise and the partnership teams, but we have a model, a financial model that we can walk you through. And you give us information about how many business owner clients you've got and other stuff, and we'll show you this. But the value is the referrals that we are going to be able to create for you in the first 3 to 9 months through your client's advisory team and through their peer network. And we have seen it happen over and over again. And long story short is we'd love to calculate that for you individually and talk through that with you individually if you want to have a conversation with Elise and the partnerships team. But I would be thinking about it in terms of the monetization event. Really, the short term is what if we could just fill your calendar up with introductions and referrals? And we have done that with folks that we partner with. What else, Jenna?
Derek asked, how do I use my experience as a former owner with a successful exit to differentiate me from other wealth managers?
Ooh, great question, Derek. Great question. I love that. I think coming back to a little bit of what we've talked about here today, I think that you're going to have an amazing opportunity, Derek, as you create messaging. So, right, ideal customer profile, obviously the industry you came from, you would be like a rock star in potentially, right? I want to talk more with you about that. But again, you could be the wealth advisor that specializes in that industry, right? Super, super narrow, super deep, right? I think you want to take the pain points that have nothing to do with wealth advisory, but to do with running a business that you felt in your time. And you want to go connect with those prospect business owners over those pain points to show them that you understand them and their business. Hope that makes sense. Love to talk with you more about that, Derek. That's an amazing opportunity you've got. Gianna, other folks.
Yeah, Manahar asked, would you work with other value growth advisors?
Would we work with other value growth advisors? Potentially, potentially. So, long story short is value growth advisor. I'm going to answer your question as if I was advising you as a business owner on hiring in general. Um, and so value growth advisor is this sort of made up title that we have in the EPI world. I'm not speaking down against it, but just saying it's a title like a COO or CFO or anything else. But I think what's important anytime you get to a title is not the title itself. What's really important is what are the duties? What are the roles? What are the competencies that someone needs to have in order to effectively do whatever it is that you want them to do, right? And so we're always open. We've got relationships with lots of different value growth advisors. And certainly we are scaling and growing ourselves and are always in the market for folks who want to join our team, or sometimes in much larger engagements, we might link arms with folks. So great question. But again, it comes back to the competencies, right? Um, Says, does that advisor, do we have the competencies to serve the client? Where we don't, we link arms as a sidebar. If this wasn't clear, uh, we do some of the work for our clients ourselves, but we have an extended team of 40 partners, not value growth advisors, but leadership coaches, executive coaches, fractional VPs of sales, marketing agencies, right? Because if you're going to serve a client, again, with those needs, you have to have the solutions to bring to the table. So we certainly love to connect with folks outside of ourselves. Yeah, great question. Other folks, Jenna.
Yeah, Joe asked, have you ever used Seamless AI for list building?
Ooh, Seamless AI. I've heard of Seamless, Joe. I am not familiar with what it is. I mean, we use a lot of the AI tools just for thinking partners. I use Claude by Anthropic for copywriting. That's a freebie one for you there. Um, in terms of so yes, in terms of like copywriting, I think AI tools are amazing. I like Claude by Anthropic the most. I follow some marketers online that really like Claude. And the key thing with AI is obviously writing the prompts and training it to write in the style of certain well-known copywriters and then having it go from there. Full candor, all of the emails that you got asking you to come to this webinar were written by AI. Those were written by Claude. I oversaw it. I modded the emails, but Claude was my thinking partner on that. So yeah, that's a great use case. And then again, clay.com that I referred you to can be great for customer research for anything you can find in the web. Yeah, great. Looks like you're using it as well, Noah. So great to hear. Jenna, any other questions?
That wraps up our Q&A unless anyone
Wonderful.
has some last minute questions they'd like to get in.
We'll give you 30 seconds. Raise your hand if you got a last minute question. And while you're doing that, I would just encourage you one last time, if you are a person of intention, you want to take action on what you've heard today, you're looking to grow your practice, you're going to need a value growth advisor. And so we'd love that opportunity, at least in the team would love the opportunity to meet with you, talk about what you qualify for, talk about whether it's a right fit or it's not a right fit to partner with us. If you're not ready for that, download that playbook you see on screen. So with that, oh, I see something in the chat. Subscribe. Oh, Jenny, yep, Jenny, you dropped our sign up to the newsletter there.
Yeah.
With that, everyone, it has been a pleasure to be with you. It's an honor that you stayed late listening to the Q&A. Sign up and look for our emails for next month. It will be on the second Tuesday of April. And beyond that, we look forward to interacting with you in the in-between if you would like to have a conversation. With that, have a great night, and I wish you all success. Take care now.